thoughts. I'll go further and say 1% seems more likely. That'd be 300 billion. 300 billion on 100 billion of free float, price goes up a lot. And here's
Attention all crypto investors. A Bitcoin ETF approval could be coming soon, and it could have a major impact on the crypto market. Some experts believe that a Bitcoin ETF could unleash a $300 billion influx of capital into the crypto market, sending prices soaring. But what exactly is a Bitcoin ETF, and how could it impact the crypto market? In this video, I'm going to break down everything you need to know about Bitcoin ETFs, and Mark Yusko gives you expert opinion on whether a Bitcoin ETF approval is likely and what it could mean for the crypto market. So if you're invested in crypto, or if you're just curious about the potential impact of a Bitcoin ETF, then be sure to watch this video until the end. And let's get started.
There are a lot of people who should have gotten approved, right? The Winklevoss twins were the first to apply. They should have gotten approved. There was no reason not to approve it other than, again, kind of the way the game is played and the people in charge want to be in charge. So any new disruptive players, I think, are unlikely. Kathy Wood partnered with one of our portfolio companies, Amun, to do 21 shares. That looked like a great application, dinged, pushed out. I think Bitwise is a day ahead. iShares on 10/16. As much as I would love it, again, portfolio company, full disclosure, I would love for them to get approved. I still don't think it's going to happen. I don't think they'll be denied. I just think they'll be pushed. And here's why I'm 50-50, Paul, to answer the question, is I think they could approve on the 17th, but I don't think they will. I think they'll push it into next year. So they push 90 days. That gets you into January 15th. Yeah. You could push again then into March, April, but that's it. Then you have to approve. Now, what's interesting is we have this little thing called the halving coming up in mid-April of 24. And so it would be an interesting alignment of stars. But could they pull the trigger on BlackRock in a month? Yeah, they could. So I believe the ETF will be approved sometime around year end, whether it's in early January or December, sometime in that time frame. And I think that will pave the way for a very large influx of capital. I know you've had Eric on the show about this, and he does this great work, right? I mean, there's 30 trillion with a T, 30 trillion. Remember, 1 trillion is $1 every second for 31,710 years. 30 trillion, that's the total amount of money managed by RIAs and others that is not allowed at this point for whatever silly reason to own Bitcoin. And they can't own GBTC and they can't own Bitcoin miners, and they're called a timeout. Well, once there's an ETF, particularly if it's an ETF that BlackRock runs, there's going to be no excuse, and they're all going to have to approve it. Their clients have been asking for it. I would say I have a Family Harmony account at UBS. They won't let me own anything related. Why? It's my money. We buy what I want to buy. And they're like, no. So I think all that goes away. And I think Eric's number is, let's say 1/10 of 1% comes in. That's 30 billion. Well, but wait, 30 billion on 500 billion, that's not that much. Well, no, it's not 500 billion. 400 billion of the 500 billion of Bitcoin's market cap doesn't really trade. It's either locking up like the Satoshi wallet or the Winklevoss wallet, or hodlers that just said, take it out of my cold dead hands. It's only about 100 billion that is the free float, to borrow a TradFi term. And so 30 billion on 100, that'll move the price.
Yeah,
for
sure.
I don't think it's going to be 10 basis points. I think it's 1%. I think you have to do 1%. Like as a fiduciary, if you got, 50% in equities at some of the highest valuations in history, and you got, another 30% in bonds, which have had the first 2 negative years in the history of the bond market, 140 years of history, 2 negative years, looking pretty ugly. And you got this asset that is the best performing asset. Again, 11 of the 14 years that Bitcoin has been alive, it's been the best performing asset of all assets. It's the best performing asset then this year. I think 150 billion would be 0.5%, right? Instead of 10 basis points. And it looks like he's updated his thoughts. I'll go further and say 1% seems more likely. That'd be 300 billion. 300 billion on 100 billion of free float, price goes up a lot. And here's the interesting thing, Paul, is the way halvings work is the fair value increases. So we've got a tailwind. The fair value today, based on Metcalfe's law model that Tim Peterson runs, I think is fantastic, says that the fair value is somewhere in the low 50s, 52, 53. Let's just call it 50. So at the halving, fair value doubles. What do you mean, Mark? What are you talking about? Well, think about it. The miners who secure the network, their costs are fixed, mining machines and electricity. So if their block rewards, the number of rewards that they're paid to secure the network, gets cut in half and the price doesn't move, then they're out of business. So there's a built-in mechanism to move the price higher, which is actually really interesting because that attracts attention because there's movement. And so, long story short, fair value, every halving has added a zero. So we went from 100 to 1,000, then we went from 1,000 to 10,000, now we go from 10,000 to 100,000. So if fair value is 100,000 and we're trading at 26, it's a pretty rapid increase to fair value, I think, as investors buy things that are below fair value. But then what happens in the fall, post-halving, you get this parabolic blow-off top. And in the previous cycle, fair value was around 30K. We got all the way to 69. That was because there was too much leverage and too much gambling and speculating. I don't think we go 2x this time or 2.5x this time. Could we get 1.5x? Sure, that gives about 150. Something like that. I've been saying this for 5 years. My hashtag #GetOffZero is the wrong number, right? This is a truly unique diversifying asset that must be in everyone's portfolio, okay? It doesn't have to be your whole portfolio. I never said that. It should be at least 1%. I'll argue 2 or 3%, but 1%'s fine. And had you done that a decade ago, okay, had you taken 1%, half from stocks, half from bonds, 1%,
Yeah, for sure.
put it in Bitcoin, your portfolio would have done two things. It would have compounded at about 250 basis points per year better with less volatility. So it reduces risk and adds return. It's the perfect diversifying asset because it's 0.0 correlated to bonds and 0.15 correlated to stocks. And look, Markowitz won the Nobel Prize for a reason. CAPM works. When you add diversifying assets with reasonable levels of volatility or even high levels of volatility, if they're highly uncorrelated, your portfolio becomes more efficient. And so as a fiduciary, you can't not have this asset, particularly if now there's a ETF by a trusted brand. So retail, many of them have abdicated that day-to-day responsibility to their financial advisor in a good way, right? Most people shouldn't manage their own money. I don't mean it's a bad thing. It's just that's not their specialty, right? They're nurses or construction workers or financial managers or whatever it is. That's not your day-to-day thing. And it didn't used to be that way, right? In the good old days, you worked for a company and you had a pension and they had a professional manager that took care of the money. And you got a defined benefit for the rest of your life. And then they snookered us by saying, hey, we're going to change the rules and we're going to make it affordable and defined contribution. Well, that was just a gift to corporations because they had to spend 30% less to fund their obligation, went straight to their bottom line and into the manager's pockets, and they thrust that responsibility on the individual. The average individual doesn't spend the time or have the knowledge to manage a portfolio. It's not a criticism, right? I'm not a great chef. I shouldn't try to cook my own food, right? That's not my expertise. I should go take advantage of other people's expertise. I am a financial manager. I take care of people's assets. So I do think that the average investor will be very well served by having a good RIA, registered investment advisor, good financial advisor, who will say, I gotta put 1% of that. And again, that's not even a big number. If we got 2 or 3